Ladies and gentlemen, good day and welcome to Sobha Limited Q4 FY23 results conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Darshit Shah from ICICI Securities. Thank you, and over to you, sir.
Thank you. Hi everyone, good evening. ICICI Securities welcome you to the Q4 FY23 result conference call of Sobha Limited. We have with us the management team represented by Mr. Jagdish Nangineni, Managing Director, Mr. Yogesh Bansal, Financial Officer, Mr. Vigneshwar Bhatt, Company Secretary and Compliance Officer. I would now hand over the call to the management team for their opening remarks, post which we will open the floor to Q&A. Thank you, and over to you, sir.
Thank you, Darshit. Good evening, everyone. Sobha team and I are happy to interact with you post our yearly results of this financial year 22-23. The investor presentation, as you know, based on the audited financial results adopted by the board, can be accessed from Sobha.com. In this call, we would like to touch upon our last year performance and briefly on the outlook for the coming year and beyond. FY 2023 has been an excellent year for us, particularly in two areas, sales and cash flows. We achieved record sales every quarter from Q1 all the way to Q4, ending with 34% from growth from financial year 22 at 5,198 crores. Our cash flow focus has also resulted in highest ever cash flow in collection and net cash flow generation, and helping us reduce our debt by 697 crores, highest ever in our history. We started the year, as you would know, cautiously in the backdrop of geopolitical tensions, increasing interest rates, high inflationary environment, and increasing real estate prices. But we are very positively surprised by our customer optimism, and that has helped us deliver our stupendous real estate performance. We have launched 9 projects during the year, 7 in Bangalore, 1 in Trivandrum, and 1 in Hyderabad. 2 new city additions for us. Consistent launches during the year has surely helped us keeping our sales momentum intact throughout the year. During the year, we have seen the highest ever increase in our price realization too, aided by new launches and also release of new towers in existing projects at higher prices, resulting in the increased cost for us. Collections from real estate has also been highest this year, aided by the increased sales and improved milestone achievement during the year. So this is the first year post-COVID where we could operate without any pandemic-related interruptions, and that has really helped in this improved performance. And surely this has helped us achieve our highest net debt reduction too. As you would have seen in the financials, margins is still a matter of concern, which is due to the recognition of higher costs in our contractual projects, write-offs in some of our very old receivables in manufacturing division. We believe the lower margins in the contractual and manufacturing business is largely taken care in this financial year and might last for another quarter or so. We anticipate to grow this business next year too, with better margins and better working capital management. We continue to execute our current order book. New projects will also be sought within our financial and operational requirements. With the overall economic environment being optimistic, particularly in the cities that we operate in, we are very optimistic about our growth in the next year too. The extent of growth, of course, is dependent on 2 factors. One, ability to launch new projects, and the sales velocity which we can achieve in the new project launches. We plan to launch about 7 to 8 million square feet in FY24, starting from Q2, against 4 million that we have done in FY23. We are gearing for increasing our pipeline of projects in the coming years too. With this brief commentary, I would like to hand it over to Yogesh, our Chief Financial Officer, to give his commentary on the financial performance.
Good evening, everyone. Thank you for joining us. I will just quickly go through some of the financial highlights for the quarter and FY23. During the quarter, we have handed over 1.36 million square feet with value of 956 crores, and for the year 3.71 million square feet with value of 2,524 crores to our customers. Revenue for the quarter was 1,240 crores and for the year 3,402 crores. So our total revenue was up by 29% as compared to FY22. During the year, we have generated highest ever net cash flow of 697 crores, achieved through our financial discipline. This has helped us reduce net debt number by 30% in FY23. We have also managed to keep our borrowing costs under control. Our EBITDA for the year was 462 crores at 13.6% EBITDA margin. During the year, we have recognized projects which were sold mostly pre-COVID. Our major part of the construction cost was incurred in last 2 years. And our PAT for the year was at 100 crores. So basically, margin was low because of spike in commodity price. Once we start handing over most recent projects, margin are expected to improve. With this, I would like to thank you for all participation, and now we can open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. First question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much, and congratulations on good sales performance and meaningful debt reduction. My first question is with respect to your launches. You talk about 7 to 8 million square feet of launches for fiscal 24 versus 4 in 23. Your overall launch pipeline was about 14.5, if I remember correctly. How should one think of this? I mean, what is the visibility on this 7 to 8 million square feet launch, and why not more?
Good evening, Puneet.
Yes, good evening.
Yeah. So, thank you. The launch pipeline that we currently have, which is in the forthcoming projects, like you have seen, it's about 14 million square feet. These are all at various stages of development. Some are in design stage, some are in approval stage, some are in just initiated stage. So basis the stage of the where the projects are, we are confident of at least doing 7 million square feet this year. And of course, it also depends on some of the approval timelines, but we are reasonably there in terms of ability to launch this. And going beyond also, the remaining pipeline that we have, I think we should be able to do that also in the next subsequent year. So overall, whatever we have in terms of the forthcoming projects, that we should be able to launch it in the next couple of years, starting from next quarter.
Is there any risk of approvals or delay in the context of changing political landscape?
As such, we don't see any kind of such risk, barring few days, weeks, and months here and there. But there is no as such change in the kind of in any kind of environment. And here we are talking about launches across multiple cities. So hence, even if there is some kind of delays or uncertainties that can come in, we think it's largely going to be in timeline rather than in anything else.
Is it possible to give a breakup of the 7 to 8 million square feet? Where should we expect and what all projects?
So we should expect at least about 5 million square feet of this in Bangalore and about 1 million or odd in NCR and remaining in other states.
My second question is on cash debt reduction. You've made meaningful progress in debt reduction. Congratulations once again. Very good to see that. Do you still intend to reduce debt further, or are you happy with the current debt and rather use the cash flows for building for growth?
So you are right. We have the debt reduction that what we have done this financial year is also not something which we planned for. But the strong cash flow that we could manage month on month has clearly resulted in this debt reduction. However, we have started using cash flows for our building up new pipeline of projects too, which we can see that there is in Q1 and Q2 of last year we have done 200 plus crores in the first couple of quarters in debt reduction, and subsequent Q3, Q4 it's been about 100 plus. So part of that cash flow is being used for new business development. However, the going forward, first actually the debt levels that we have currently is far more comfortable to us and than what it was about a year and a half ago. So that gives a great comfort, and clearly the optimistic scenario of the current economic environment and what we ourselves have positively surprised with the kind of demand that is out there. So we would like to aim for growth and allocate far more capital towards growth than just debt reduction. That's one. Second is, with the increased sale, even in the next financial year, we will have to spend a little bit more on the construction outflow. So both put together, I think we might not see similar kind of debt reduction as what we have seen in this financial year. So from a capital allocation, partly increased spending construction costs and partly in the capital allocation for growth.
But you're still aiming for some sort of debt reduction in fiscal 24.
End up reducing debt, the extent of which is it might not be in the same level, but it will reduce.
It will reduce. That's good. Lastly, on your any update on the new monetization of land in Hosur, Hoskote, etc. Any progress there?
Yeah. Hosur, like we have been wanting to monetize it through plotted development to start with, and bits and pieces we have started selling some of the land parcels wherever we could find the right pricing. Now that Hosur as a location also has developed. Unfortunately, in the plotted development, we had hit some speed bumps, which I think we should be able to resolve in the coming few months, and we should be ready to reinitiate the approval process and whatever time it takes. We aim to launch the project this financial year, and unless there is something else that we cannot see right now. But that's one of the things that we have in our pipeline this financial year.
So that's included in the 5 million square feet Bangalore launch?
No, that we have not taken that yet, because that's an additional bonus that comes.
Okay. That's good. Thank you so much.
Thank you.
Thank you. The next question is from the line of Murtuza Arsiwala from Kotak Securities. Please go ahead.
Yeah. Hi, sir. Just two questions from my side. One, if I look at the cash flow statement, which is on slide 8, if I look at full year 23, the contracts and manufacturing division, and if I just look at the inflow and the outflow exceeds the inflow. Even if I look at FY22, while the performance was better than 23, not much to cheer about. How should I think of those cash flows from the contracts and manufacturing division going forward? That's point number one. And the second is, if I look at the balance sheet, which is on slide 25, I see a large jump in the other non-current assets, which is roughly about 3.7 billion going to about 9.3 billion. Any specifics around that we should know of?
Good evening, Murtuza. To answer your first question regarding the cash flow on contract, like I was saying, this year has been a year where, from an operations point of view, we have a lot of projects which were coming to completion where we had to spend extra, and corresponding inflow based on old contracts has been little lower. And second is from a working capital management in some of our division, like leasing. So it's been a little bit of a challenge because of, again, earlier old milestone payment plans and what we had to execute against it. So that we think that we can improve upon it in the future, and that's one of the financial framework that we had put in place to make sure that these the contractual and manufacturing division that we intend to continue to grow, but on a basis where it is fiscally or financially far more better for us, and hence that's the outlook for us in future.
Sure.
To answer your second question, which is related to the balance sheet item, Yogesh, would like to take that?
Yeah, can you repeat your question?
If I just look at the year-on-year comparison on the balance sheet, the other non-current assets have jumped from about 3.7 billion in March 22 to about 9.3 billion. There is an increase in inventories and other current liabilities, which I can understand is normal course of business. But if you could explain on the other non-current assets, if there is anything specific that we should know.
This other non-current asset has increased because of land advances. During the year, we have declassified some of the advances, which current to non-current has gone.
Okay.
Thank you. The next question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Hi, Jagdish. Thanks for taking my question, and congrats on a great year. First is on some interesting changes in the launch pipeline. So obviously, Hosur, you explained that it has been moved out because of some minor blip. But in NCR, I can see a couple of projects, added. Those are fresh acquisitions, and can you share some more details about, which sector it is, and etc.
Good evening, Pritesh. In NCR, we did a new deal in the last quarter, so which is reflected in the pipeline for forthcoming projects. In addition, second one is we had signed up with Karma a few years ago, and that project also would come into pipeline, and we have clear visibility on launching that.
In which micro market does these new land are located in your island?
The new land that we have taken up, it's also on Dwarka Expressway, very near to our existing projects. And I think with the development of and completion of the Dwarka Expressway, we believe that it's a very interesting and high demand market, and hence and we believe that it's a profitable transaction. So hence we have taken up that project.
Sure. And the old one is, I suppose, the sector 81 in New Gurgaon, is it?
That's right. It's in sector 80.
Okay. And second question is on any timelines on postcode, specifically if you want to highlight, is it included in our Bangalore launch or should be FY25?
So on the Hoskote land, Pritesh, we have been working on consolidating and also start initiating design for the project. So we in this I think during the second half we should be able to crystallize on the extent of first phase or couple of phases of launch. This is a large land parcel, so we would like to take it in phases. And the master planning and the overall planning we will initiate this year as we get clarity on the clear land parcels that we can develop on. So once that is crystallized, probably in by end of this year, calendar year or so, we should have clear visibility on the launching of that project too.
Sure, got it. And one last on your area not offered for sale. We saw a very sharp decline from 7 million square feet last quarter to around 2-3 million square feet now. I guess it's because of launch of further features in Dream Garden and also Gurgaon project, Sobha City, or are there any other movements apart from these two?
Yeah, that's a good observation, Pritesh. There are two reasons for that. One, of course, is the launch of the old new towers in the existing project. Second, we also have clearly defined what is an ongoing project and what is a forthcoming project. So as a definition, we have said that ongoing project is the one where we have a RERA registration, and whichever is not satisfying to that we have moved into forthcoming.
Sure, got it. I have a couple of more questions, but I'll jump back into you. That's it from my side. All the best.
Thank you, Pritesh.
Thank you. The next question is from the line of Siddhant Dand from Goodwill Warehousing. Please go ahead.
Hello. Hi. Can you hear me?
Yes, Siddhant, we can.
Yeah, hi. So, we saw a chain of events. So there was a SEBI issue, there was an ED issue, fire compliance issue. More recently, there was the IT raid. And I think promoter has also taken a non-executive role. So when do we see which of these issues are resolved and how many are left to be resolved? And what role will the promoter play, going ahead? Both PNC Menon and Ravi Menon.
Yeah. I'll take up the second question first, Siddhant. The promoter, of course, as you know, they have business in UAE too, and that business also has grown quite a bit in the last couple of years. So there is a lot of comfort in terms of the scale of the business that has been achieved there. And Mr. Menon being also becoming older and would like to take a step back. And hence, Mr. Ravi Menon has taken over as a group co-chairman in Dubai, and that which requires a certain element of geographical presence there, and hence moved into a non-executive role. But at the same time, I would see this very positively because one, a group health will always is very helpful for a group company which is based in India. And second, in the last 2 or 3 years, as we expanded the city presence of our company, our ability to manage business through virtual and monitoring on a continuous basis has been very effective. And that I think would continue with the kind of promoter focus and ability to manage it with respect to the geographical location. So both would contribute. I mean, I don't see it as any kind of negative there. in fact, very positive for us.
Okay.
Second, on the issues related to the various agencies, where apart from the recent IT search that has occurred, the other matters have largely been dealt with, or which has been communicated, and no further developments there are, and hence I think majority of the issues are passed for us.
Okay, so what's the IT issue is the only one that's resolved. What about the ED? I thought that case was still going on, the 2007-8 one.
Yes, that's an ongoing matter, but as we have communicated in December last year, they had provisionally attached some assets, and we are taking a legal recourse to that. So right now it's in a judicial platform. So we wait to see how it turns out. But we are very confident of that we will come out without any damage.
Okay, so you expect to overturn the assets that they've attached?
That's what we believe in, and the timing of that is anyone's guess, based on how the progress happens in the judiciary.
Okay, I'll come back in the queue. Thank you.
Thank you, Siddharth.
Thank you. The next question is from the line of Dhruvesh Sanghvi from Prosperity. Please go ahead.
Yeah, hi. Congratulations for the good full year on balance sheet management, operational management, and lot of things. Just to expand on the previous question, would you like to say that when officially Ravi Menon is now a non-executive chairman, so is there no executive role, or what kind of decision making will he be involved, if at all any? Some more light on it. I think I understood the rationale that he's gone there for taking a handover on the global businesses as well. But I was under the impression he will participate in the Indian operations to whatever extent he can. So whatever can be said there, it would be great if you can.
Thank you, Dhruvesh. Yes, you are right that he has moved from an executive role to a non-executive role. And since last 1 year, I have clearly overlapped with him in terms of some of the operations that he was handling as well. So it's been in a year where we could work together. And going forward also, his involvement would be in a non-executive role far more strategic, and ability to contribute from his exposure to the other international markets and bringing in that know-how into India, into our Indian operations, and guide us in that front. And of course, periodically also review or go through the operations as and when that is required. So the focus of the promoters in the India business is extremely high, given that this is where they have started the entire real estate business, and we have worked really hard to bring it up to this stage. And we have a great platform where I think we can continue to grow from here. So from a growth point of view, from a focus point of view, we are completely on the ball here. And from a time perspective, I think his ability to add value is far more strategic, and that's very helpful. That will be very helpful too.
Right. Thanks a lot. One more part is, I just wanted to understand on, we have discussed about margins multiple times, but just to understand it from a context of some of the fixed cost or the cost metric perspective, we see employee cost to be in the range of 300 crores for the year, and the items under the items of other expenses are approximately 500 crores. So ballpark, this 800 crores for a real estate company, isn't it just dramatically too high for us, or what can we do? Because what happens here is that, let's say if there is a small builder having 8 or 10 or 15 buildings being managed, a large portion of these overheads are not there. So when will we really see a large margin or a normalized margin coming in to our plate? Because if we are selling 4 million, 5 million square feet a year, one would easily expect that a builder of our nature should at least make 1,000 rupees of profit out of a 8,000 sale ticket per square feet. And when do we really see this translating into the P&L?
Yes, you are looking at these costs, Dhruvesh, but the employee cost is the total cost. We are a backward integrated team, so hence the cost of the employees of the whole 3,400 plus employees would be there, and part of which gets into the cost of the product. And the other and hence I don't think that's a major concern given the operating model that we have, right? But the other bit which is on the other costs, right? So which is also a lot of it is also related to the project cost.
I do understand that a partial would be variable from it and partial would be fixed. But my essential question is that when do we see margins coming on the P&L? I mean, is it like another 3 years away where we see dramatic improvements in of the visibility of what we saw in the past? Basically, we have been selling 4 million square feet for nearly 4-5 years now. When does the benefit of these 4 million square feet translate to see in the revenue and cost book, leading to at least 600-800 rupees per square feet profitability for us? Forget about even 1,000.
Sure. Like I mentioned in my opening comments, we are also now the next clear target for us in terms of how we can see improving our margins. So first, this like FY23, we have worked on our contractual and manufacturing and tried to see what best we can do for this for improvement in this financial year. So which we will start seeing that in this financial year. Second is on the real estate side. We would continue to see some kind of margin pressure in the coming next few quarters. But basis our current estimates, we can see a clear turnaround coming from Q4 of this financial year.
Okay, fine. And
so where Dhruvesh, we think that our current margins, PAT margins of about currently it's about 3%. Those should clearly improve at least. In our estimate, at least double, or in fact more, 2 to 2.5x what we can achieve.
Okay, great. Yeah, that is the direction I was looking at. And last part is in terms of model, because now we will be starting some sort of business development activities, either in the form of land purchase, JVs. Based on the experience, what is our preference? Should we probably move towards as much as more complete ownership model, or because the troubles that we are facing today are a large part is because of some JV partner or some things which were not correctly managed in the past on that area. Is there a preference or a huge caution in terms of whom are we partnering with for the land tie-ups, or whom are we buying the land from, etc.?
Well, Dhruvesh, I have not placed any kind of wrong calls that we have taken in the past. Those were taken at that point of time with the right earners, and it is some sort of a butterfly effect, which is unforeseen even for any of us. So those points, if we have to learn on that and try to see if we can do anything different, yes, of course, our process of business development, part of it is one of the criteria is to minimize this kind of issues that might come up in future. But complete ownership versus a joint development model, that is will continue to be a financial decision too, right? Basis in the sense if we find some opportunity which is excellent and which is an ownership based only, we will go ahead with it. However, since we have reasonable land bank right now, where we can launch projects which is own land, I think focus first is to do projects on those, and while we do business development in the form of a joint development model. So while the cash flows from these own land projects improve, our ability to do business development in ownership model will also be enhanced. So which I think in the next couple of years, that we will be able to see, and that model will also increase its share in our business development.
Thank you. Mr. Sanghi, may we request that you return to the question queue for follow-up questions. Thank you. We'll take the next question from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon. Thanks for taking my questions and congrats for a great set of numbers. So my question is on the demand environment. Obviously, numbers have been pretty good. What kind of pricing uptick have we seen in our projects during the last year, and how do we see the outlook going ahead?
Thank you, Parvez. You would have seen in the presentation and in the operational numbers we have been coming out with. The last year price realization we have improved upon by 17%, which is probably one of the highest we have done in a long time. But at the same time, I don't think that's something that similar performance we can continue. We are not really factoring any kind of major price increases going forward. Of course, it will be again dependent on the kind of demand scenario, but cost-led increases were clearly sort of softened out. But the demand-led and also new pricing that we will do based on the new costs that we have baked in, those will continue, and I think we should roughly be inflationary or similar pricing is what we can achieve this year too.
Sure. And in terms of land acquisition capex, do you have a number in mind with regards to what kind of GDV or projects do you want to add every year, or any particular geography where you want to increase your focus?
So we already have always in terms of committed land payments for our existing land and also the new developments that we would like to take up. So our focus geographical areas for us in the immediate future would be Bangalore, Pune, Hyderabad, and NCR. These are our current operating markets where we think that the potential is high, and we can see a secular growth in these locations. So we will pursue opportunities in these locations. Of course, Bangalore, we already have a good presence, and hence our ability to launch projects in our own land or in already existing deals will really help us. But we will continue to pursue new transactions there as well. Second market for us, which is exciting, is NCR. NCR was the first non-Bangalore city last year which has done 1,000 crores sales. So, and I think there is a huge potential. We have been there in the market for more than 13 years. So, and where we have delivered projects. So we think that any incremental investment there would be adding to our growth there. So that's second. Pune and Hyderabad also are very exciting markets, and there also we would pursue growth opportunities. And in terms of the overall number, how much we have earmarked for this kind of business development, I think for a sustainable for the next, if I have to balance out both between cash flow and also the growth that we have to see, I think we should be comfortable in investing about 200 to 300 crores, which can be funded by our internal accruals.
Sure. Thanks, and all the best for future.
Thank you, Parvez.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hello.
Hello, Parvez. Hello, Parikshit.
Hi, good evening, sir. So my first question is on demand scenario. So you can highlight how is the demand undercurrent right now in the first quarter. Do you think continuation of the last year trend, or do you think some softening coming in?
Parikshit, on demand front, we are clearly seeing that the demand which we have observed we have witnessed in the last year seems to be continuing. It is more what I believe is in some of the markets, the inventory is key for us to actually absorb the demand. So higher the inventory we will be able to have, the better is our ability to capture that demand. And in markets, it's reasonably stable. So I think, but if you talk from a macroeconomic point of view, and if there is any impact on the overall demand, because of the interest rate hikes or any kind of uncertain economic environment, that we don't see it on the ground yet.
Given this backdrop, that continuation of demand, so what kind of growth do we expect in the pre-sales for FY24, like on the base of 50 to 100 of FY23?
Yeah, the extent of the growth is clearly dependent on our ability to do launches, Parikshit. So if I am very optimistic in terms of launches, then easily we should look at growth in the range of about maybe 15 to 20%. But if you just and if there is any slip-ups in the launches, then we might see a lower growth.
Okay. This is the last question, sir, on the promoters' non-executive roles. So typically we have seen in real estate companies a very promoter-driven decision-making on any large capital outlays on land, any large major launches. So just wanted a comfort on like will this non-executive role somehow slow down our growth aspirations, acquisition, capital allocation in a time when we are coming out of the debt issue and where the market looks to be quite promising. So how do we juxtapose all these things together and position for growth?
Right, Parikshit. If you have been following the way our company has been functioning, right from the inception, Mr. Menon, when he has established the company, it was always a management-led company, and majority of the decision making and in terms of capital allocation and in terms of driving growth has been fully professional, and with a huge guidance from the promoters. So hence, it's not anything new in the way we are functioning today versus what we were functioning about 25 years ago. So that I don't think there is a big change, but one of the aspects which is more positive right now is that the promoters as a group in the UAE are also very well recognized right now, and they're doing really well there. So that should in fact give a further boost in terms of performance here as well in future.
Okay. Just one more thing around this non-real estate business, the manufacturing, the contractual business. So now that has been a pain point for us in last many quarters now, and we still expect it to linger on for couple of more quarters. So as a future of this business, so how do we see this going ahead into the next 1 or 2 years?
Right. So we have a good order book currently, and our current focus is to make sure that the order book that we have is executed with better margins, and that's number one. Number two is the new business development in these businesses. So we have now, based on the learnings that we had in the last couple of years, so we had put in additional processes wherein we will take up projects which will conform to the new framework that we have evolved, and also our ability to monitor those projects on a regular basis will also be improved. So the combination of these two, I think we should be able to turn around Basis that in a year or so, we will review the whole strategy around it.
A bit on the Chennai market, you did mention about other markets, Hyderabad, Bangalore, Pune, and all. So Kochi, so anything on Chennai?
Chennai, we have, as you know, we have completed 6 projects. It's one of good markets for us. However, we have seen some not the kind of growth that we have seen in the other markets. So, but at the same time, there are certain asset types or say product types like plotting, etc., are doing far better there. Whereas end products are not in the similar growth path. So we are looking at opportunities and evaluating them. While we are trying to do business development in other places, we think in the overall bigger pie, Chennai right now doesn't look to be having such a large share. But in case things change, since our presence is there for a long time, our ability to identify those changes and quickly act on it will be there.
Okay. Okay, sir. Thank you, Mr. All the best.
Thank you.
Thank you. The next question is from the line of Neeraj Mansingh from White Pine Investment Management. Please go ahead.
Thank you for the opportunity. Mr. Jagdish, I have 2 questions. One is, how much is the land bank in Hoskote currently?
Good evening, Neeraj. So we have a land bank of about over 200 acres there. And we are currently identifying the parcel where we can clearly launch a project in multiple phases. So that's where we are.
Okay. And the other question is, if you see the real estate business, in the past, we had done an EBIT margin in excess of 30% also. And I know the costs have gone up, and so the reporting requirement leads you to a lower reporting numbers right now. On the current projects that you're selling, what can be a EBIT margin from those projects?
A good question, Neeraj. The current margins are reflective, of course, of the past sales that we have done 4 years ago. And what clearly happened was that of course, the pricing was far lower at that time. And in addition to it, we have been hit by a very large cost increases. And that's clearly going to reflect in the revenue and corresponding margin that we'll recognize even in the next few quarters. So, while that is said, for the future, where we have sold specifically in the last 1.5 years, we can clearly see an EBIT margins of over 15%.
I thought number would be higher. You think 15%. The last quarter you reported an EBIT margin of 18%.
EBIT margin?
Yeah.
Probably not, but we will recheck on that and
Okay, sorry. So let me put this the other way. What would be the stable EBIT margin that you would do? Because you have been doing in the past, numbers have been quite high in terms of EBIT margins. And so
let me put it this way, that our aim is to, of course, increase our margin, and hence we have already taken these price hikes and new pricing into factor, new costs into the factor, and priced our new released inventories also. Those we should see far better margins, and our aim is to move towards overall PAT margins for the real estate business to be in double digits.
Okay, you're talking about PAT margin. Okay. Okay, got it. Okay, thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you, Darshit. I express my sincere gratitude to all participants in the call today and for your patient hearing. I hope we have answered some of your questions satisfactorily. In case of any further questions, please do reach out to us. Your queries and views have always helped us improve. We look forward to a good performance in FY24 too, with an optimistic outlook towards the economy and the industry. We believe Sobha is very well positioned to grow with a disciplined operational and financial model, which we think is being set up for building and scaling in the long term. We will continue to pursue our goals with passion, and I wish you all a very good evening with an exciting IPL final coming up tonight. Truly appreciate your support. Thank you.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.